You can see a few transactions on the screen that we will be recording in Ledger so that we can relate to what we have learned until now. In the first transaction, as you can see on January 3rd, the business purchased goods worth $8,000 for resale from Khan's Logistics. So the journal entry for this can be purchases account debit and Khan's Logistics account credit by $8,000. As we have two accounts, we will prepare one ledger account for purchases and one for Khan's Logistics. So purchases account has to be debited, which means we will record the transaction on the debit side of purchases account with the name Khan's Logistics account and put the value $8,000 in the amount column, and the date is going to remain January 3rd. Similarly, as Khan's Logistics account has been credited, the transaction will be recorded on the credit side of Khan's Logistics account, and the name is going to be of the opposite heading, which is purchases account, and the value will remain the same as well as the date. Moving on to the next transaction, on January 8th, the business paid $720 for electricity by cash. So electricity account is going to be debited and cash account is going to be credited by $720. Just like the previous transaction, we have two accounts, so there are going to be two ledger accounts prepared, one for electricity account and one for cash account. Electricity account has been debited, so as you can see on the screen, we will record on the debit side of electricity account with the name cash account, and the value is going to be $720. Similarly, cash account has been credited, so we would be recording on the credit side of cash account with the name electricity account with $720. On January 15, the business returned faulty goods worth $350 to Khan's Logistics. So, Khan's Logistics account would be debited and purchase returns account would be credited by $350. The first entry would be recorded on the debit side of Khan's Logistics account, and the name of the account is going to be purchase returns account. Similarly, the second entry would be recorded on the credit side of purchase returns account, and the name of the account is going to be Khan's Logistics account. In both cases, the date is going to be January 15 and the amount is going to be $350. On January 25, the owner took $500 cash for personal use. The right approach is going to be to debit drawings account by $500 and to credit cash account by $500. The first entry would therefore be made on the debit side of drawings account. The name would remain cash account, and also since cash account has been credited, we would record the second entry on the credit side of cash account, and the name is going to be of the opposite heading, which is drawings account. Just like the other transactions, the amount will remain the same in case of both entries, which is $500. We are done recording all the transactions we had in hand. This is how the accounts look after we have made all the entries. You would notice that in some accounts there are more than one entry. That is because those accounts appeared in more than one transaction. For example, Khan's Logistics account has both purchase and purchase returns on it. And similarly, there is electricity and drawings on the credit side of the cash account. Now that all the entries have been recorded, we will now close one of the accounts to review what we have learned about how to close T accounts and bring the balance down. On the screen, you can see you have Khan's Logistics account with entries on both sides. We have purchase returns account on the debit side and purchases account on the credit side. We shall now be closing this account and bring the balance down to the next month. On the screen, we can see that we have $350 on the debit side and $8,000 on the credit side. So, since the credit side has a larger total, we would choose $8,000 to be the total of both sides and close it with two underlines. We can find out the difference between the both sides by subtracting $350 by the larger value, which is $8,000, and we have found out that the debit side is smaller than the credit side by $7,650. This difference is going to be recorded on the debit side as balance CD with the last date of the month. We have recorded balance CD on the debit side because clearly debit side is smaller in value. Now that we have closed the account and balanced it, we now have to bring the balance down to the next month. This is why we have to transfer balance CD to the opposite side of the account as balance BD. Having a balance BD with the date February 1 and value 7650 means that before any transactions took place in the month of February, the business already owes $7,650 to Khan's Logistics. That is all about ledger accounts. Going back, we have learned the format of T accounts and what each side of a T account stands for. We have learned how to record entries into the ledger from journal. We have learned the concept of recording transactions directly into ledger, and we have also learned the 5 steps of balancing a T account. If you have any confusions, please do let us know. Thank you for watching.